Yo, what's up, guys? So today we have the GPP USD. On the GPP USD, we have this. Sorry, kind of muted myself a little bit. So here we have the GPP USD, which is which is I'm looking at the institutional chart, which is the futures of the pound. So I don't know why I keep muting myself. I hope right now I'm clear. Okay, I hope we're clear. So I'm going to have the watermark a little bit on the background just to see what we have here on the GPP USD. So this is the GPP futures, which is the pound now. Let's bring in the watermark. So I want us to do the analysis on this particular currency. Fundamental, actually, we're going to use the fundamental information on this one. So in this case, I'm going to go to the weekly time frame because the commitment of traders report, updates only once in a week. So in this case, if I bring in, I'm just gonna make it as simple as it could be. So I'm gonna bring in the court report from here. Now, on this court report, we are looking at where the institutions are positioning themselves, the commercials who are the hedgers, big boys, the commercials, the blue line here, these are the commercials. These are the non-commercials. In this case, now, commercials are above the zero line. This means that this where they are around 61, and we have the non-commercials on the lower side. Mostly what I learned from this, I'm gonna make these symbols I've said. I'm not gonna go into a lot of details, but you can see that most of the time when the commercials are heavy long, here we can see a small curve because we had this sell here, and who was selling the trend? The non-commercials here. But you can see, despite that, we can see that commercials, when they were heavily long, the market did not really rally. So we're still looking forward for another long position. And you can see every time commercials, in this case, they're long, we expect price to really go up to spike to the upside. You can see everywhere they are long, all right? You get that rally. See here, you get the rally. Can see even here, commercials, the blue line, guys. I want you to understand that. The rally, very sharp rally. Every time commercials are buying, and you can see they are coming from this low. This was like 2023 and all the way back to this high. 2023, the same year, but you can see after going like that, we get the rally. And we can backtest this information. All right, we can go all the way because you can go all the way back in history and you can be able to see that commercials, they've been, every time they are going long and non-commercials are on the other side touching the extremes, reversal has to happen. And see here, you can see even here, see, and I'm using the weekly time frame. So you see, even if we get to green candle, that is a win. So look at this again, rally, but you see this rally set from here. And you can see all this time I'm pointing to the upside, we are staying above the zero line. Everywhere commercials were staying above the zero line, and commercials at the bottom, we got that rally. So you can see we can go all the way back to this area. You see commercials are heavily buying. Who's selling? Non-commercials. Non-commercials will sell until it can no longer have more funds to continue selling. So they'll be forced to close their shorts and align with the commercials in this case. So from here, we can easily see, let me just hide this one. You can see everywhere I've placed those lines, we can see we have been getting those sharp rallies to the upside. So here I'm still looking for the same, though it's not looking good, guys, because we have a small curve here, but still I'm looking for a rally to the upside. Okay, so I have now a bullish bias in terms of fundamentals. Now let me give you what I call confirmation, which is not that good. It's not that good, but not good. But look at this. I have a divergence, right? I have what you call divergence. as price is pushing lower on the weekly time frame, price is pushing lower, I'm getting a bullish divergence here. I want you to understand that non-commercials are trend drivers. So if the price is pushing lower and these guys are not going down, in fact, they are curving to the upside, to me, this is another just sort of a confluence that I use to say, okay, these guys, where are they buying? All right, they are abandoning the low. And if they're abandoning this low, look where the retailers are positioning themselves, because also understanding where the retailers are positioning themselves is very important. In this case, look what retailers are doing. Retailers are getting even more bearish in this case. So here I have just like, that's the one step that can convince me that I'm fundamentally bullish, because whatever tools we are using here, this is coming from the Commitment of Traders report. Now, when I come to the index now to look at the strength of these commercials here using the index, when I look back using 6 month, with 6 month, you can see we are almost neutral here, but you know, commercials are hedgers. These are the guys who can hedge for a very long time. So I'm just gonna go back to the biggest time frame possible. So I'm gonna look back. This is just 6 months. I want to look back at least 3 years. That's 156 weeks, 3 years in this case. And guys, when I look back 3 years, I get to see something. I want you to see. We can see we're above the green line. In fact, let me hide the market and you see something there. We are above the green line, and every time we're above, this means that commercials are getting more bullish than even the retailers, the way retailers are getting bearish here. So in this case, to me, here, I'm expecting a rally. I want us to backtest every time commercials were above this green line, which means that they were bullish. What was happening, because there are hedgers in this case. So we're just looking at least places where commercials were above the green line. So here, 1, 2, let's look somewhere else. You can see here, we had that. Here, we were above the green line. This means that we got more bullish here. You can look, okay, here as well. We are looking back 3 years. This, look at here, probably somewhere, I don't know which one I'll pick, maybe here. Let's go back and here again. Here we have 2, I don't know which one, maybe this one and this one. Don't know. We'll check when we bring in the market. And let's just reach here. Lastly, let's just reach maybe here. So allow me to bring in the market, and I'm gonna hide the tools, and I want us to see if market was buying. Everywhere we have plotted these lines. And you can see, guys, this, we got the rally here, we got the rally here, rally here, rally here. Look at that. Here you can see some green candles here as well, here as well, here, all right, here as well. Look at that, here as well. Here, look at that, 2 weeks. There's some 2 green candles there, 2 weeks. Buy, heavy buy position, and this was during 2022. Here as well, and here we're looking forward for the same thing to happen. Are you getting that? Looking forward for the same thing to happen here as well. So to me, that's a complete bullish bias in this case. Now, let's look at what we call the valuation, because we need to understand that the pound is always being traded against the dollar. So we want to measure the value of the dollar against the pound. For the pound to be bought, we need it to be undervalued. We need it to be cheap in terms of the dollar. So I'm just going to come here, adjust some settings here, remove the US Treasury bond. I'll be left with the dollar here, which is actually just the DXY, as you can see here. And when I look at it in the valuation according to the last 10 days, I can see we are heading towards the red line. The more we go down there, it means that we are undervalued and we'll get a buy. Let me show you. Let me also hide the market in this case and to show you what happens when we are undervalued. You see, we're just going down there, but I want you to see every time now we are heading there. Every time we go below the red line, we get the rally. Look at this. We go. That means that this pound is cheap and it can be bought. Show you here. Here. Where else we are undervalued? here, undervalued again. Where else? Here, 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 here. And so here as well. So we have gone back all the way to 2024, 2023 here. This is enough. So let's bring in the market and see if it was undervalued against the dollar, if it gave us a buy. So just let's just hide our tools down there, bring in the market. And I want you to see, at least we get some green candle. You can see here, undervalued price, spend some time, then it goes up, undervalued here. You see, price drops a little bit, some levels here. Look at that demand to get the rally, get the rally here. Here, price did not perform well. The market did not perform well here. You can see we stayed on this valuation here until here. This will go the two candles, but at least we should check what happened on the COT report when the market was undervalued here to get a really to understand what happened here. But you can easily see that even if it was here, there was no demand. Price was supposed to drop to a proper demand if it pushes higher. So also technicals plays a big role. Look at this one, takes some time, undervalued, then pumps. Takes some time here, pumps. Takes some time here and goes up. Here you can see the rally. You can see most of the time the market has gone up than it has failed. And look at that strong rally, and right now we're looking at the same strong rally. So that's another thing that to me it is enough to convince me that now fundamentally everything seems to be aligning. Remember the analysis that I did on the AUD/USD, the same thing is happening here, but a little bit this one is not more convincing like what we had on the AUD/USD. So I want us to look at the last thing which we call the seasonality. Seasonality is the last thing I look at to complete my fundamental bias. Then we can go now to the second step, which is the technical step. And in this case, you can see this is the pound, British pound. And here we are looking at the seasonality of different years. So here you can see, and I do this, we can see it showing us, if I look back 2 years, seasonality showing us that price can drop a little bit before pushing higher. This month of April, this is according to 2 years. Now, if we look at the 5 years here, price is supposed to drop and rally. So this seasonality might not be perfect, but what does that mean? It means that at least we're having the same idea of looking for a bull market. So from there, we go to the second step, which is the technical part. Now, on the technical part, on this case, let's look at the monthly time frame. We start with the monthly time frame. If we have a bullish, bias in this case. First of all, look at the trend. The trend is not on our side because look at this. Drop, correction, drop, correction, drop, then correction. So basically, we'll say that we don't want the market to take out this high because of what we call the trend. The trend here is very bearish, and this is the strong pivot that should not be broken. Now, here we can say this will have the demand. I mean, sorry, I don't know why I keep saying demand. The supply here, but the supply is not looking good because just have information here. So price gave us this supply here. Now, on this other hand, where we have a bullish bias, we have this monthly, because you can see when the price was pushing higher, rally, correction, rally, correction, rally, correction, then the rally. So first to say we are bearish, actually, the market has to break this pivot. But as long as this pivot is not broken, we might see again another rally to the upside. But if this pivot is broken, the market closes below this low, right? The market closes below this low, then you can conclude and say we are in a bearish phase. So right now the market's back here, and you can see this is a reversal pattern, a hammer candle accompanied by a decisive candle to the upside. So this is what can say this one is a monthly demand, and also a strong pivot. So we can start refining this level to the weekly time frame. So in the weekly time frame, when you drive, we drop to the weekly time frame, I'll say, to find both supply. You see this one on the other hand, you can say this supply, go back to that area. So you have rally base drop, weekly supply, looking good, and it's fresh. It has never been touched before. Look at that. Now, on this other hand, we have the pivot, and you can see the weekly trend is very bullish in this case. Weekly trend looking bullish, rally, correction, rally, correction, major high, because this is what we call the internal continuation, correction, rally, deep correction, rally, and you see we are here. So high possibility for the weekly trend to continue because the weekly trend has not shifted bearish. So you cannot conclude and say you are very bearish in this case. So here, my interest is now to refine this area. We refine it the weekly time frame. The demand is going to look like this, and you see price is there. But we don't trade the weekly levels. Let's go to the daily time frame in this case and refine our levels properly. Now, if you got the daily time frame, I want you to see this where now big challenge is going to come in. So you can see originally this the demand. The demand here dropped as rally. Price has hit this level and it has gone up. But you see there's another supply here. There's another supply here. So this level of another level, we can refine this one and make it here, here. And now we can say the most active fresh supply is this one. And the one that is at the bottom has been touched, mitigated. We don't want to use it. And you can say this is a level that we want to watch. So you can see price is here. So these guys, this way I'm interested to go long actually on this currency. This way I want to go long on this GBP. So if I'm looking for to go long from here, probably I can target an opposing level on a weekly time frame. If I check on the weekly time frame, probably can target these areas or this high. I don't know. But this is a pivot I want to see it being respected. So from there, you can go to the GBP/USD currency because you have this is the same chart. This is the institutional chart here. This way we go to the broker, see if this just use, I think, this broker here. Okay. So if you look at this area, if you're looking for it to go long, we have said we want to trade this demand. This is the demand that we want to trade in this case. Go to the daily time frame. Now on the daily, we're going to refine this one actually. Already we have done that on the futures side. So we're just going to conclude the same thing here. This one. And now look at that drop base rally. Oh, nice. Pivot. Yes. Demand. So this is where, guys, I'm interested to buy this currency from. But I want you to see something. This is the main pivot on the weekly. So of course, from my swing position, I'll want to have my stop below here. So my stop loss actually most of the time, it's always 30% of the zone that I'm trading. What I mean is this. My stop loss is always 30% what I'm trading of my entire zone. So 30% is here. So this means that basically my stop loss should be where? My stop loss should be here. But unfortunately, I'm around the pivot. I don't want really to play with this pivot here. The market I don't want to be stopped out. I want to reduce the chances of being stopped out. So probably this time, I'm not going to take 50%, 30% stop loss of the entire zone, but I'm going to go to a half around that area. So just to reduce chances of being stopped out. So that's where I'll put my stop, and long position here, stop loss here. I want to reduce chances of being stopped out here. And now we can target, there's this small opposing demand here, not demand actually. How do you call it? Supply. right? This opposing supply, but this supply is small because it's happening on the daily time frame. But when I check the weekly time frame, okay, I see this shooting star. Yeah, this is the zone that I want just to pay much attention here. So you can target 4R basically here, but of course we are targeting beyond the 4R, we're targeting a little bit higher because above this high, we have what we call the weekly supply, which is this one. Weekly supply, this zone. Market's likely to push all the way to these highs here. So meanwhile, I'll not want to pay attention to this, but it's a zone. If fundamentals will be in our favor when price approaches that area, we'll talk about it. But as for now, just target this 4R, but if things goes well, we can target at least this high or eventually there, but we want to be realistic. Maybe here, right? Maybe here 5R, but guys, this is just exaggeration. Target 4R to be realistic. 4R, 4R is okay. 4R is okay there. And that's how we're gonna take position. So this is where we are going to trade from. So let's go to the daily time frame back on daily time frame, and you see this where we position ourselves. My community, I've shared this one already to the to our group. So this is what I'm looking at. My stop is gonna be there. Other people, when it comes to stop loss, actually that one, everybody, they can place how they want, but this is how I want to stay more protected, to reduce chances of being stopped out, and to put in the same risk. It doesn't mean that when I put my stop loss down here, so I'm taking a bigger risk. No, I'm taking the same similar risk I take every day, every time I trade. So this is where we have, and this is the trade. This is the trade that already this is the setup. You can see my stop is just down there, and already I have a pending order, and this is a 4R target. So otherwise, guys, let's see how it will play out. Anyway, this is just anticipation of fundamentals and technicals, but whenever you're trading, always apply risk management in any case, anytime. Otherwise, guys, have a nice day.